Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Wednesday, everybody. After months of horrible performance and over $7 trillion lost since its 2021 peak, in trading on Tuesday, stocks in mainland China and Hong Kong surged on news of several significant moves from the government to save the slumping market. The benchmark Shanghai Composite Index gained 3.2% on Tuesday, snapping a 6-day losing streak with its largest single-day percentage gain in almost 2 years, while the Shenzhen Composite Index gained 5.1%, its best day since 2019. The CSI 300 benchmark closed 3.5% higher in its best day since late 2022. The small cap equities that have so far borne the brunt of the rout also surged, with the CSI 1000 gauge up 7%, the most since 2008. In Hong Kong, the blue-chip Hang Seng Index jumped 4%, while the local technology index, which tracks players including Alibaba, JD.com and Tencent, surged 6.7%. Beijing likely wanted to ensure a positive feeling in the market just before the country goes on holiday for over a week for Spring Festival or Lunar or Chinese New Year celebrations. So, what support was announced? There were 3 main things. 1. The China Securities Regulatory Commission announced policies to restrict short selling and margin lending while, quote, guiding institutional investors, including public funds, private funds, securities companies, social security funds, insurance institutions, and other funds to enter the market with greater intensity, end quote. 2. Central Huijin Investment Co., China's main sovereign fund, also announced that it is buying large quantities of ETFs. And 3, in an exclusive report, U.S. outlet Bloomberg says that regulators, quote, plan to update the top leadership on market conditions and the latest policy initiatives, end quote, suggesting that Xi Jinping himself may be taking an interest in the falling stock market, though this has not been confirmed. The Bloomberg report expresses, quote, while it's unclear whether any new support measures will come out of the Xi meeting, traders are hoping this time will be different. Some $7 trillion of value has been wiped off Hong Kong and China equities since their peaks in 2021, and piecemeal approaches to support the economy and stabilize markets have so far failed to lift sentiment. For policymakers, it's important to stabilize the stock market to avoid further hurting consumer confidence as China enters the week-long Lunar New Year holiday, end quote. Of course, prices are still down significantly year to date and year on year. And of course, the question remains, will the uptick last? Willer Chen, an analyst at Forsyth Bar Asia, told clients today, quote, long-term wise, reform and policy would be the most important to support the market ultimately. All in all, it is all about macro recovery and stability, end quote. 2 more quick updates on the economy while we're here. According to the newly released Caixin BBD New Economy Index, the contribution of high-value-added industries such as biomedicine to China's total economic inputs hit a 7-month low in January, due primarily to a decline in capital inputs. The index registered at 29.4 last month, indicating that new economy industries accounted for 29.4% of China's overall economic input activities. The reading is down from 29.9 in December. This week also saw the publication of the Caixin China General Services Business Activity Index, which seeks to provide a more independent snapshot of operating conditions in industries such as retail and tourism. According to the index, activities in China's services sector grew for a 13th straight month in January, but at a slightly slower pace than the previous month. Quote, as total new orders increased at a lower rate, end quote. The index fell 0.2 points in January from the previous month to 52.7. A reading above 50 indicates an expansion in activity. The official services PMI barely scraped in with expansion, coming in at 50.1 in January. According to the Caixin Services PMI report, in January, service exports continued to rise, with new export orders increasing for the fifth straight month. Employment increased slightly for the second straight month too. Wang Zhe, the senior economist behind the report, expressed on the findings, quote, "Taking both sectors into account, employment stabilized, with the services sector outperforming manufacturing." End quote. There is a very small group of voices that sometimes complains that China Update only covers negative news about the Chinese economy. With the first three stories today being relatively positive, this should undermine this complaint somewhat. But of course, I am not trying to present a positive or negative picture of China's economy. I am trying, however imperfectly, to present the most accurate picture of China's economy, whether that be positive or negative on any given day. It just so happens that in recent years, the economy has been in an especially poor place, so the coverage, of course, will reflect that reality. I will not make up positive news just to appear balanced. I would rather appear biased but be objective than appear objective through being biased. I will continue to do my best to present the most accurate picture of what is happening on the ground through sober and grounded analysis. And I hope you will continue to follow along with me in these efforts. And if you're enjoying today's episode, it's a huge help if you can hit the like button, and for those who are not subscribed but would like to continue watching episodes like this, maybe consider subscribing. This is the best way to help the channel grow, and for those who want to keep the channel financially sustainable, I rely primarily on your support to keep going. Patreon and Buy Me a Coffee links are in the description below. Thank you so much, everybody, for the ongoing support. Next up, UK-based The Financial Times reports today that Chinese chipmaker SMIC is on the cusp of next-generation chip production despite US restrictions. The piece writes that China's national chip champions expect to make next-generation smartphone processors as early as this year. The country's biggest chipmaker, SMIC, has put together new semiconductor production lines in Shanghai, according to two people familiar with the move, to mass-produce the chips designed by technology giant Huawei. According to two people with knowledge of the plans, the piece continues, SMIC is aiming to use its existing stock of US and Dutch-made equipment to produce more miniaturized 5nm chips. The production line will make Kirin chips designed by Huawei's high silicon unit, designated for new versions of its premium smartphones. The Chinese chipmaker was instrumental in Huawei's surprise comeback last year as it produced 7nm processors for the Mate 60 Pro smartphones. Quote, "The yield, 5nm chips, may be far less than what TSMC gets, but it would be quite a breakthrough and another sign that the US export controls have been leakier than some had expected. If this report is accurate, will it hasten the US government to take more actions against SMIC, or is anything new targeting SMIC and Huawei off the table as the US and China ramp up dialogues?" End quote. Okay, next up and finally for today, this is quite unbelievable news, frankly. Anger over football superstar Lionel Messi's decision to stay on the bench during an exhibition match in Hong Kong on Sunday looks to be boiling into a full-blown nationalist-fueled PR and even political situation across China. It may even end up creating greater diplomatic tensions with Japan. The 36-year-old World Cup winning captain, Messi, was in Hong Kong for an exhibition game, but was benched over a reported hamstring injury. The decision prompted boos and calls for refunds from fans at the time in the stadium. But then by Tuesday, senior officials, netizens, and state media took what was initially a sports event complaint and escalated it to a full-blown political incident. On Tuesday, Hong Kong Chief Executive John Lee told reporters that the Culture, Sports and Tourism Bureau is ordering the organizer, Tatler Asia, to address the incident, saying the organizer, quote, failed to meet the expectations of the public, end quote, adding that, quote, the performance of the organizer has a significant impact on Hong Kong's image and reputation, end quote. State-run Global Times, in an article the same day, quoted Tian Feilong, a professor at Beihang University in Beijing, as expressing, quote, the anger from Hong Kong government and its people is completely justified and very reasonable. The incident reflects that Hong Kong has always been a place that strictly adheres to and values the spirit of contracts. It is normal to be angry when encountering things that violate the spirit of a contract, end quote. Outspoken nationalist and former editor-in-chief of the Global Times, Hu Xijin, tweeted today, quote, many Chinese fans bought high-priced tickets and went to Hong Kong specifically for Messi. They deserve a formal explanation and apology, end quote. This is all blowing up online too. The Weibo hashtag Messi broke the commercial bottom line amassed over 300 million views in less than 24 hours and occupied the #1 spot on the platform for 8 hours. Another hashtag demanding an apology gained a further 600 million views. One popular comment on Weibo tried to argue that Messi had breached the national security law in Hong Kong. Another said the move reflected Messi's disdain for Chinese fans, expressing, quote, he's just looking down on you. He doesn't care about the city. He doesn't care about you, end quote. Others demanded that Messi also not play in Japan, otherwise it would represent a direct insult to China. Speaking to media in Tokyo today, Messi explained, quote, I missed the last match in Hong Kong due to muscle discomfort. It's a shame because I wanted to participate. I wanted to be there. And even more so when it comes to these games when we travel so far and people are so excited to see our matches. I hope we can return and we can play another game and I can be present, end quote. While this all does seem like a bit of an overreaction, there is plenty of room for this mess to grow further. Ya Lingjiang of Substack publication Following the Yuan observed today, quote, a potentially larger PR crisis is brewing. While some mainland fans who flew to Hong Kong to watch the game are still reeling, others are spreading a conspiracy theory that Messi sat out because he disliked China and favored Japan. Considering the historical roots and intensifying relations between these two countries, if Messi were to play in Tokyo on Wednesday, in the last friendly of his Asian tour, it could create a greater mess for him and the Argentine national team in China and Hong Kong. A potential consequence is that Messi and the team's brand deals may suffer, even though the touring team is Inter Miami. If Messi did play, and if the theory became more mainstream, it may even prompt netizens to protest, end quote. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Wednesday, and I will see you all tomorrow.